0.2%. The NASDAQ 100 adding about a 0.1%, really building on 2% plus gains that we saw yesterday. The small caps right now, little change to down with a red arrow. In terms of the stocks that we're watching, Tesla was absolutely ripping face yesterday in the face of BYD outpacing it on sales. Today we have more bad news on Tesla, and the stock is up again. All right, it's only up 0.5%, but this after sales in Europe dropped 40% in the last month, and they dropped 10 months out of the last 12. Kathy Wood still bullish on the stock, saying she thinks it's worth $2,600 by 2030. Finale, it's a little bit lower than her previous target of $3,000.
Still a long way from 280. But to your point, dip buyers are coming back in. I'm looking at a different sector, of course, highly watched. Remember, tech execs are pushing the White House to roll back curbs on semiconductor chips. And this comes as the chairman of Alibaba said he's seeing the beginning of a bubble for AI data centers. He claims that data center investment announcements in the U.S. are duplicative. You are seeing NVIDIA down 0.5% today. And Matt, as we know, this has been a massive gold rush on Wall Street. The question is, has too much money poured in too fast? We'll see.
Duplicative is an awesome word. Duplicative. I'm going to start saying that more often. We are back right now with Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, what do you think of mega cap tech? Obviously, that was the wind that filled our sails the last couple of years. It's been more of an air brake this year, but is this a cheap entry point?
So look, it depends what your time horizon is. In the near term, we are seeing that the earnings numbers are trending downwards. Some optimism today, but generally speaking, people are worried that the lofty earnings expectations cannot be met. Now, if you're looking at over 5-10 year horizon, however, we're still very much of the mindset that technology will continue to be at the cusp of all of the productivity growth and future innovation. So we still are maintaining a strategic overweight, but certainly in the near term, we have got some concerns that you could see some further weakness for Mac 7.
A little bit earlier, Seema, we were talking about how there has been a division on Wall Street on how much upside or downside there is from here. But one part of that thesis, I want to pull out what has been said by UBS on this in particular, because the consumer story seems to be of critical concern. When it comes to UBS, they say the U.S. consumer is tiring, and almost no hard data point was inflected positive or infected positively, with the exception of U.S. durable goods. But what has happened since is the soft data has flattered to deceive. It's gone up and gone straight down. That is UBS Chief Strategist Manu Boega.
We took out highs from yesterday.
How much of a risk is the consumer, the U.S. consumer, at this juncture?
Well, you're certainly seeing strains build up. We have been seeing strains even before the beginning of this year in some of the lower income households. And now you are seeing some of it creep through to the medium income. I think the high income households are still holding pretty firm. They have such a significant savings buffer built up over the last couple of years, given their exposure to equity markets and to real estate. So we're not too concerned about them. But certainly from our economic forecast, we are expecting there to be a slowdown in consumer spending over the next 4 quarters. But again, it's not moving into negative territory. So it's a slowdown rather than a kind of an all-out concern where it could really drive the US into recession.
First of all, I want to shout out Levinstein and Alex Webber, who wrote that story on UBS. Thank them for their work. And then kind of take a turn here, Seema, with you to the positive. The Trump administration wants to reduce regulations. The Trump administration wants to cut taxes. And that fairly soon. Is that going to boost the animal spirits for this market?
Yeah, so within our assumptions where we see that the US economy slows but it skirts recession, we're assuming that in the second half of the year, you do start to see some of these more growth-friendly initiatives coming in. Specifically, deregulation is a key one. We know that business sentiment, business optimism was really boosted by the idea that the Trump administration would start its term with deregulation. Now, that's fallen back to the background, but we do think it's going to come in the second half of the year. And importantly, when we're thinking about the US versus Europe, that question continues. The takeaway I'm still getting from European investors is that when you're comparing the two, actually the fact that Europe is not deregulating is one of the key reasons why they still believe in US exceptionalism. So that is a core part of the story, and it is one of the reasons why we're expecting the US to just slow down and not see recession in 2025.
Seema, there are a lot of investors who are out there looking at the macro signals, but there's another group of investors who are looking at either technicals or just the direction of the trade? You look at a day like today, yes, the S&P 500 is up, but the sectors leading that are fairly defensive. It's energy up 1%. It's financial services leading the way, materials. Is this still a defensive trade? This doesn't scream confidence yet. It looks like the dip buyers that are coming in are still looking for safety.
Absolutely. We're still on the defensive mindset. We're still thinking about which are the companies you want to have exposure to in this environment. It's still the ones with balance sheet power. It's still the ones with have got strong margins and cash flow. That is still a very defensive mindset. Now, within some specifics, we think that financials, because they're less vulnerable to tariffs, and because we think that some of the concerns around the US economy have gone too far, they do stand to do a little bit better. But overall, this is more of a defensive posturing that we're seeing across the whole asset allocation positioning, even within fixed income, really starting to think about high quality. So certainly that's the direction of travel for us.
What do you think about the rotation that we've seen, especially into European defense stocks? Is that sort of optimism for more spending out of Germany and its EU counterparts going to come to fruition?
Yeah, I think it is going to come to fruition. I think the bigger question is how it starts to feed through to the broader European economy. Now, we know that defense stocks, any spending on defense doesn't typically have a high multiplier, but the absolute number that we're looking at is so huge that there will be some positive effects feeding through to Germany and then also to Europe. But at the same time, that doesn't really feed through to growth numbers until 2026. So there could be a bit of a window where you see a pullback, where you don't see the economic numbers maybe turning up as some investors were hoping for in the near term. But certainly if you're looking out of a 2026, 2027 horizon, these are better growth numbers feeding through from defense through to infrastructure and then to the broader economy.
Seema, wonderful to have you today. That is Principal Asset Management, Seema Shah. And coming up, KB home sales missing sales goals for the first quarter and cutting guidance as consumers pull back on home buying. We're going to talk about what this means about the U.S. consumer. Stick with us. This is Bloomberg Open Interest.
Home results fall short. That's a sign of consumer sentiment weakness. Not much confidence in that. Staying above the daily pivot, but we're below yesterday's con.
In case you missed it, on Bloomberg Crypto.
You have sell-side analysts taking a look at what you're doing and starting to compare you to Coinbase. Are you after their business?
Well, I think we compete in the general sense of offering crypto to customers, but also this is a nascent industry and not very many companies have entered yet. Even though Bitcoin has now been around for 15 years, institutions and other companies have been waiting for signals to enter the market.
There are a lot of financial firms that are looking to tokenize private funds also.
Yeah.
Are you in talks with any of them?
We're generally in conversations with anyone trying to do interesting things in this space. If I had to pick the biggest pain point, AI is like transforming everything. So I think it's tough right now if you want to be in the AI sector as a retail investor. There's relatively few options that you can actually invest in.
Don't miss Bloomberg Crypto live Tuesdays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current cycle completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Big rejection.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week.
Are we going to get rejected or are we going to break out?
Business, markets, economics, tech, and climate. Each week, we will go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. That's an extraordinary.
Me a minute.
We can be the change that we want to see.
What's the all-new Wall Street Week? More than what you need to know, it's what you need to think about. Welcome back to Bloomberg Open Interest. Let's get a check on what stocks are doing 11 minutes into the session. We're still looking at gains, not terribly strong. The S&P 500 yesterday closed up 1.76%. It was the biggest gap up on a Monday since 2022. So 57.60 is where we pretty much finished the day. We're at 57.73 right now. The NASDAQ gaining about 0.2%, also ripping higher yesterday. Now trading well over the NASDAQ 100, well over 20,000 at 20,218, and the small caps lagging a little bit today. But basically some solid gains that look to be stable, at least in the first few minutes of trade. Now let's get to some of the top calls for the day.
Yeah, absolutely. Some of the analyst action in focus this morning. First up, we're looking at Carvana getting upgraded to a buy at Morgan Stanley. The firm says the pullback in shares creates an attractive entry point for the stock, and you are seeing it up now 2.6%, losing some of its gains, but still up. Next up, Bank of America double upgrading Cloudflare to a buy from a sell, citing improving fundamentals. Bank of America says the software company is set to be an AI winner. It is now up 5.8%. And finally, Ally Financial getting downgraded by BTIG to a sell. The firm cites heightened competition among the banks for auto loans and macroeconomic headwinds. A lot of people have been watching the stock closely for health of the consumer, Matt. It is down only about 0.4% right now. All right, let's turn back to some earnings news out of the home builders. KB Home reporting disappointing Q1 results, slashing its annual forecast. The CEO highlighting a challenging environment, saying, quote, consumers are working through affordability concerns and uncertainties related to macroeconomic and geopolitical issues. Oh, and don't forget, those rates are still
engineered liquidity.
Mortgages. Drew Redding of Bloomberg Intelligence joins us now with more. So, Drew, the outlook, I guess, the problem for these home builders really across the board is just affordability. There's not a lot of inventory out there, right?
Yeah, so affordability has been the big challenge for a couple of years now. You have home prices up more than 50% since pre-pandemic levels. Mortgage rates still in the high 6%. So that's the number one challenge out there. But what we've increasingly heard from the builders is the psychological impact of making a home purchasing decision is becoming more of a component of why sales are stalling. You have consumers out there who are more concerned about the economy, perhaps more concerned about the prospects of losing a job. So I think with all that uncertainty, that's also holding back the market. Now, you mentioned a lack of inventory. That's certainly been one of the big sprees for the builders over the last couple of years. Limited for sale inventory in the resale market has funneled demand towards the builders. But we're starting to see that in some of the key markets like Florida and Texas, that resale supply is really starting to build, and that's putting some price pressure on the group.
Drew, I look at, I always default to the comp function on the Bloomberg terminal, right? It shows you a 5-year picture of the stock price, and I put KB Home up there against DR Horton, Lennar, and then Toll Brothers, which I guess makes maybe more luxury product. You're the expert here, but is that sector, the higher end home builder, are they doing better than the rest of the group just because that sector of consumers is doing better?
Yeah, that's a great question. And that's really what we've seen over the past year or so is that builders with exposure to the move up and luxury segments are doing a little bit better. There's more traffic in those markets. Toll Brothers is obviously the name that comes to mind. They're kind of in a unique spot within the public home building realm. On the other hand, you have the entry level builders, which are seeing more of a hard time, which you would expect because those buyers are more sensitive to that monthly payment. And when you have rates, as high as they are, and there's a lot of volatility in monthly payments, you're going to see those consumers start to pull back more, and that's what's happening out there.
So, Drew, in aggregate, is the direction of travel worse or better? Because a lot of people were thinking one of two things would happen. Either eventually mortgage rates fall, you see a set of buying, unclear whether the prices in aggregate go up or down once you see more buying, or you have an overhang and you don't have rates come down and you're kind of stuck in the water. Where is your base case for where things go from here?
Yeah, it's a good question. So we're in the heart of the spring selling season, and you would have thought with mortgage rates coming down about 50 basis points since the start of the year, we would have seen more demand, and that's just not materializing yet at this point. And I mentioned, I think a lot of it has to do with the uncertainty that's out there with the broader economy, the employment situation. As it relates to the new home market and the builders, they also have the overhang of higher costs related from tariffs, the potential threat, from immigration policies, which could impact labor. So there's a lot of headwinds out there for the group right now.
All right, Drew, great to have you on the program. Thanks so much for joining us. Drew Redding covers the housing space for us out of Bloomberg Intelligence. At the top of the next hour, we're going to get new home sales, by the way, and the latest consumer confidence numbers from the Conference Board. Definitely some data you don't want to miss, and we'll bring it to you live as it breaks. Coming up, not guilty. The Journal reports that Boeing is in negotiations with the DOJ to withdraw its own guilty plea. That's because it thinks maybe this administration will be a little bit more lenient than the last. That's next. This is Open Interest.
Well, my order didn't fill. I'm trying to sell it short from me up here at the VWAP. Let's see.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news.
We want a premium short, but
powered by more than
that order
3,000
did not fill.
journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
Nvidia is one of the best stories in the tech space. That actually matters a whole lot more. It might shock some of your viewers. You're watching the close.
Came back. Well, the opening, we took out the
Context changes everything.
we came back up to take
bringing you
opening
up to the minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
engineer liquidity to just drop this price.
This is Bloomberg Open Interest. Quick check on what's going on in stocks right now. We have, we had, I should say, a follow-on rally from the big gains that we saw yesterday at the close. You can see now the live cash trade has turned lower, although not by much. The S&P 500 down 2/100ths of 1%. The NASDAQ 100 down 4/100%. Nonetheless, a reversal here, and maybe this due to some of the confusion we've got on the trade timeline. Small caps are down, and the VIX actually is down a little bit as well. In terms of the individual stocks that are moving, here's the reason for the drag. NVIDIA is now down 2%. That big heavyweight pulls on the S&P because it's worth so much. Tesla is now lower by 2.2%. Remember, at the open, it was gaining by about 2/3 of 1%. We still have green arrows on the biggest of them all. Apple rising, but only 0.4 of 1%. Google is also up 0.5%. And then, as Shinalis points out, we have some runaway gainers in tech. CrowdStrike holding the cybersecurity company up 4.6%, and Mobileye up more than 5% as well. So a bit of a mixed market, Shanali, but overall, the index level, we're looking at red now.
Yeah, we are looking at a live trade. Some of the ones that were gaining this morning now turning around. We'll talk more about it in a second, but I want to switch gears because there's another story that caught my eye, and it's that Boeing has changed its mind. The Wall Street Journal reporting that the plane maker wants to withdraw a deal with U.S. prosecutors to plead guilty to misleading regulators prior to 2 deadly crashes of its 737 MAX aircraft. We're now going to bring in Bloomberg's global aviation editor, Benedict Campbell, who joins us for more. What's the timeline here and the prospects for them to revise their deal?
So at this point, it looks a little bit like a test balloon. We don't know for sure whether this is something that Boeing is in fact considering. As you said, the Wall Street Journal reporting last night that this is something they are looking at. It's a really complicated back and forth that's been going on, as you said, for years, stretching all the way back to those 2 crashes, one in late 2018, one in 2019. And as a result of that, Boeing was accused of misleading regulators, essentially, and was put in a penalty box for 3 years and said, okay, you can't do anything wrong for the next 3 years, you're on probation. And then something did go wrong last year with that panel blowing out. So the whole thing sort of blew up again. And in the end, Boeing agreed to plead guilty, and that also blew up in the end
back
because
to
the
the
judge
VWAP,
didn't
yeah.
like some of the elements. And now we're back and forth again. So we will probably get a new accord in sometime in April 11th. But there's been so much back and forth, it's hard to say. But Boeing is probably thinking they might be able to get a better deal out of this new administration, which might be a little less heavy-handed on corporates. So that's what they're at least considering, according to the journal.
Also, this administration is very transactional, right? You do something for me, I do something for you. That's the art of the deal. How is Boeing's relationship? How is CEO Kelly Ortberg's relationship with President Trump, given Trump's concerns about Air Force One and the price and delivery of that aircraft, and Trump's best friend Elon Musk has kind of a rivalry with Boeing in terms of SpaceX,
there's an error with trade
together fairly well
right now.
Yeah, I mean, you're right, Matt. It's a very complicated relationship and very hot and cold. Trump obviously very unhappy about the delays on the Air Force One plane that's being built by Boeing. But then only a couple of days ago, Boeing was awarded this really important new fighter jet deal, the F-47, as it's starting to be called. So obviously back in the good books. And as you said, this is an administration that is transactional, that is probably very protective of its national champions. We've heard Trump speak very favorably of Tesla. He has probably an eye towards Boeing. He wants to protect that company. It's part of a global duopoly. He wants to make sure that they aren't damaged more than they have to be. So this is a gamble on both sides. They might, in the end, just sort of shave away some of the elements of the plea. Whether they throw it out entirely, that would sort of be the nuclear option. That's hard to say. But they might ask the judge, look, there's a couple of things in there that we don't like, that we think you can change. So that might happen. But the idea of throwing it out is also on the table. So that would be a big move.
All right, Benedict, thanks for keeping an eye on all of it for us. Bloomberg's Benedict Campbell will surely be back when we have more on this case. And Shanali, you're looking at the defensiveness in markets. We're not talking about Boeing and Lockheed Martin in terms of defense stocks, but when you see gains for utilities, when you see gains for consumer staples, then you know that investors are getting defensive. What do you see right now?
It's interesting. You have to look at the different indexes. And the first half hour of the trade every day has been setting up to be extraordinarily interesting.
Wow, that's broken down into 163 groups.
Yeah, that's a lot of them. If you had less of them, you'll see that most of the major sectors are in the red today. Fewer.
And then you can just type SPX L1 index to get fewer groups.
Right, and energy is leading the way to the point of that defensive trade. Now, if you look at the Magnificent Seven, I think this is kind of interesting. You actually now have 2 stocks lower in the Mag 7. That's Tesla, which has turned around in the course of an hour here, and pretty meaningfully, it's down almost 2% now. Nvidia is losing off the heels of those Alibaba comments on overbuilding here when it comes to the data center boom. But of course, if you're overbuilding, then the hyperscalers could benefit. It would drive down the cost, wouldn't it?
Yeah.
Meta, Amazon, Alphabet, Apple, all up on the day still. Microsoft too.
And by the way, I think that Alibaba story, which is one we haven't really gone into yet, but we're going to in the 10 o'clock hour, is fascinating. If you have Alibaba concerned about over-investing, you've got signs out of DeepSeek that maybe people are spending too much. You had signs out of, I think, Xiaomi yesterday that they could spend 20% less on chips. It really calls into question these massive capex plans that you have at the hyperscalers in the U.S.
You know, not as obvious here, but also those big companies like Blackstone, Blue Owl, Apollo. This is one of their biggest theses for investing. So it actually spreads into the financial industry too.
Yeah, data centers are a big play, obviously, especially in real estate. And we're going to focus in on that in the next hour. Coming up in the next hour, Al Rabel joins us. Kane Anderson, CEO and founder. We're also going to talk about snacks. Daniel Lubetsky joins us from Kind. And Jacob DeWitt, the CEO of the nuclear company. This is very much related to the data centers and hyperscalers. Oklo joins us after a disappointing earnings report. This is Bloomberg. You're watching Open Interest.
Not sure what's going on here. I've really experienced this kind of issue before. But let's see, electronic session.
Joe Wolf is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next.
We are going to send this error report to the broker here.
I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors.
30 seconds
Scientific
before
and commercial possibilities just
the
beginning
release
to come into focus.
Consumer
I'd like to actually
sentiment.
see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Top Trump administration officials are going before lawmakers on Capitol Hill this hour. They're expected to face tough questions about how the editor of The Atlantic magazine was looped into a group text about top secret plans to attack Houthi rebels in Yemen. Correspondent Charlie D'Agata is at the Pentagon.
Officials tell me the rules are very clear. It is strictly forbidden to share classified information like the type alleged on an unclassified system. But this morning, the White House press secretary is pushing back, saying nothing on that thread was classified and no war plans were discussed.
Just in from the Middle East, an award-winning movie maker's been released by the Israeli military a day after his co-director said he was ambushed and attacked by Israeli settlers in the West Bank. Reporter Linda Gradstein.
Israeli troops arrested Hamdan Bilal, one of the creators of the Oscar-winning documentary No Other Land, after he was reportedly wounded during clashes in the West Bank village of Susia. Israeli police said Palestinians, including Bilal, threw stones back, and he was arrested for stone throwing.
The U.S. and Russia are expected to release a joint statement on this week's talks in Riyadh on a ceasefire in Ukraine. CBS's Ramy Inocencio.
We have gotten a few lines out from the Kremlin spokesperson in Moscow, though, perhaps trying to set some kind of expectation. One line is that the outcomes of the meeting have been sent to their capitals, their respective capitals, and are now, quote unquote, being analyzed. And this is from Dmitry Peskov. He says that they talked about technical talks, about details, and that those definitely won't be made public.
The U.S. held another round.
What's going on here?
Today.
This makes no sense.
The report card on the nation's infrastructure gives it a C, and that's an improvement from past grades of C- and D. Transportation correspondent Chris Van Cleve.
Roads, dams, and the aviation system, they were among the worst performers. And this comes as aviation safety will be the focus of a key hearing on Capitol Hill this week.
Big factors for sectors earning low marks: underfunding, and lack of resiliency to severe weather conditions. First, bird flu has